following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope everyone out there in our listening audience had a nice and relaxing weekend and is kicking off the trading week in high style. My name is Mark Longo from theoptionsinsider.com, as well as many of the programs here on the old Options Insider Radio Network. And I am joined by a who's who, indeed a rogues gallery, if you will, of options folk on the old panel today, starting off with the man holding down the Options Express hot seat today, Mr. Jon Gregius from Options Express. Mr. G, welcome back to the show, sir.
Yeah, good to be back. Good to be on the show. Busy couple days here, which I'll get to in the Express block. I just saw Kavanaugh posted that link to the 60s Minute article last night. I think I might be the only one in this company that didn't get a chance to watch that, so maybe you guys could fill me in. I was driving home from lovely Crystal Lake to New Lenox, which is about an hour and a half drive while it was on. But I only heard good things. I said, Congress, straight and narrow. Take themselves out of the trade if they were, felt there was a conflict of interest. But I only heard good things, so maybe you guys can fill me in.
All kinds of good stuff. I actually missed it as well, so Monday Mike will have to fill us all in on the details. Even though this is a story I've heard different takes on for years now. Speaking of which, let's introduce the man himself, none other than Monday, aka Auntie Mike, aka Mr. Pinky. Good old Mike Kavanaugh from KnowYourOptionsInc.com. Mr. Kavanaugh, welcome back to the show, sir.
Thank you very much. And I think within the best interest of the show moving forward, we should actually poll the listeners and let them come up with a nickname for me. What do you think of that?
I don't know if you want to open those floodgates, sir. That could
it can't
take
be
you down
worse than Pinky, Auntie Pinky.
That could take you down a very dark path. And last but not least, a man we don't actually have a nickname for yet. He is Andrew Giovianazzi, formerly of Acumen fame and now of Option Pit / Slinky Juggling fame. Andrew, welcome back to the show, sir.
Thank you very much. See, now that I'm finally a 2-week veteran of the Option Pit, you had to go back to the old Acumen thing because after that was so long in happening. But I'm here and I'm happy, very happy.
Old habits die hard, sir.
They do.
All right, and with the team assembled, we're going to dive right into the trading block.
The trading block.
And welcome to the trading block. This is, of course, the portion of the show where we discuss, surprise, surprise, what was trading, what indeed was lighting up the old tape today. And we had a relatively mild down day today across the broad market. S&P closed down about exactly 1% or 12 handles to 1251.78. The Dow closed down about 75 handles to 1278 or 1279. And then the Nasdaq closed down 21.5 to 2657. And the good old VIX cash following up with a surge to the upside today, about 4%, closing at 31.34 today. So a slight move to the downside today. Of course, we saw a lot more uncertainty coming out of the old European sector there. We have the Italian borrowing costs seem to really spook everybody. Exactly what Italy has to pay these days to get to borrow any debt these days really is getting kind of astronomical. At the same time, we know we've been talking for a while, and even on some of our other programs, about the potential in that Eurozone for some significant fundamental restructuring, and we're starting to see more potential movements toward that maybe we may actually see some of these traditional Euro countries abandoning the currency, and what impact that may have on Euro vol and the Euro itself going forward will be interesting to see. So a lot of things going on, really throwing the market into a tizzy today. Let's kick things off with you, Monday Mike. What were you really focusing on today in today's action?
Well, it was maybe action happened, before the bell with the I think Italy's prime minister stepped down, and then somebody stepped up, and they think he's
hard to believe that guy
and
has been able to cling to power for as long as he has. I mean, how many teenage prostitute scandals can you weather?
I was just about to say that guy's my idol, but I guess I'll retract that. The guy's like he's like 79 years old, and he's banging chicks hotter than I've ever come across.
Okay, well, we have to flag that one for the iTunes editors. We'll see, but I mean, even for Italy, he's a bit far over the deep end, I think, these days. I mean, they have different expectations for their politicians than we do. Can you imagine an American politician surviving a teenage prostitution scandal?
Yeah, I think they actually have the opposite expectations. In the U.S., you can't have any prostitution. In Italy, I think it works better if you have more.
Yeah, if you don't have a teenage prostitute, they think something's wrong with you, I guess.
Yeah, exactly.
Oh, what's wrong with him? He's not a man. Okay, we're going down a dark road now. But good old Italy. Just, I mean, I actually think that's a step in the right direction for Italy. That guy's been just a source of all sorts of insanity for quite a long time. So maybe they can get some steadier hands on the old tiller there in Italy these days. So aside from Italy, Monday Mike. Well,
that was that was the big news in the morning. So last night about 10 o'clock before I went to bed, the S&P futures were up about 6.5, 7 points. When I woke up this morning, they were down about 8.5 points. And I mean, that was the big move in the market. I mean, we saw, I think the numbers on the big exchange was the lowest volume day of the year. We opened up lower and stayed lower, and rallied once, broke once, and then kind of found a spot on the S&P where it was down 12 points. But outside of the overnight action, you had the lowest volume day of the year, and nothing really happened. As far as what's going on with the Eurozone crisis, what Italy did might be a step in the right direction. I don't think anybody over there knows what the direction is, and if it was a step forward or a step back. If people think that by Italy changing prime ministership, it's going to consolidate and conform and basically make the entire Eurozone come to a conclusion that, wow, well, that was a really good move. Let's talk about how to reestablish and rebolster the euro, and we'll get everything figured out in the next month. I just don't see it happening. It still seems like this is a 1, 2, 3 year kind of project that we're just kind of being led down the trail like Hansel and Gretel. We're getting little crumbs, and it feels like the witch is going to shove us in the oven here at some point.
So what's the general consensus there for KYO? You guys collared pretty heavy right now, because are you doubling down and maybe to the upside, thinking that we can turn around after this? What's the I know you guys are usually pretty cautious in the near term. Is that even more the consensus right now?
No, we're still, in the major indices, we're still playing it. Any one of these crumbs that are being dropped are adding significant, upside days to the market. So you see a low volume down day where the S&P is down 12. If the European Central Bank or Germany, or some big news comes out of Europe, the S&P could easily be up 30, 40 points. So we're not very tight on the call side right now. The puts, aren't as tight as I'd like to be, but it's difficult navigating this, because if you miss that 40, 50 point up day, it gets difficult to compete with the S&P. So we have things pretty loose right now from a collared aspect. I mean, we still have our collars in place, but they're a little looser than normal, because we're waiting for that one up day, and then we'll tighten it up.
That's actually surprising to me, given I know how you guys like to play, and I would expect you guys would be pretty tight to the downside these days. But you're right, it is kind of difficult if you miss your opportunity to get into that S&P downside in particular. And we talked on recent shows last week about how we've typically seen quite a trend in that SPX downside, where these we can call them degenerate premium sellers, call them what you will, have taken every opportunity they can to really hit those puts whenever possible. Even in some scenarios we probably thought it wasn't the wisest course of action. And over the past few weeks, we've seen a bit of a reversing of that trend, where we actually saw a lot of net unit buyers coming in to that downside, near-term downside skew, showing that there is indeed a broader level of concern about these levels here and where we are headed going forward. Now, Andrew, have you seen a continuation of that activity going into today's session coming out of the weekend?
Well, it's just today wasn't a really good indicator much. I mean, mostly of any vol coming back from the VIX seemed like just a K kind of pop it back in.
Yeah, once you factor out the time pop, it's kind of hard to see where everything else settles out.
But everything's pretty much like where it was. There hasn't been it wasn't significant any one way or the other, but all these protection options are still a little bit more bid than where you think they should be, essentially. None of that. Nobody's come in and started to wail on them yet. As far as, I always used to think there's like levels, right? There's, okay, people are on the bid, or they're lifting the offer. And right now it's more like the bid is firm, but they're not lifting the offer, right? That's kind of where it is. That's one of my, ways kind of to feel market direction. So it's not like they've turned around and started hitting the bid yet at all. So it's like there's a bid there, and nobody is running to go hit it yet. So we're still in that, the market's kind of trying to price that move we think might happen. So
interesting.
I don't think we fully recovered from a couple weeks ago. Remember, we had that tremendous crash in volatility, and then it started flying up again. Now it's leveled, but we haven't gotten anywhere near back to really that level of, somebody blew the all clear whistle. So, and I think that's kind of where we are. We call that a fatigue, market fatigue, premium fatigue.
People have their unit puts, they have their downside protection. Now they're sitting still and seeing where the wind blows from here, I guess you could say.
Yeah, exactly. They're like, has it happened yet? Are we there yet? Are we there yet? Kind of that sort of, they're waiting for it to happen, and it ain't happening.
Speaking of puts being bid, I know Groupon options finally went live, and if any of you guys had a chance to look at these, I thought maybe John, maybe your phone was ringing off the hook, but talk about puts being bid. There's you're talking 100+ vol in a lot of these in this downside skew here, looking in the front month in Groupon. It's just not exactly not exactly strong bullish sentiment looking like right now anyway, at least in Groupon. John, were you guys active at all in this today? A lot of customers
we had a lot of interest about when are the options coming, want to short it. I mean, LinkedIn and the other IPOs and the social media this year have garnered a lot of interest to short. It seems like no one in the retail is kind of following through on the belief that this is the next wave for the future of IPOs. But yeah, I mean, we're looking at the money calls and puts, and I mean, the out of the money 23 puts this morning. I think we were trading at almost $24. Were about twice as expensive as the at the money calls. We did see some people writing put spreads in here, but in some straddles and strangles. Strangely enough, no one's taken my advice in buying the cheap calls, because I'm still somewhat bullish on Groupon, but time will tell.
You're unusually the lone voice of bullishness on this one. Usually you're the dark side whisperer there, calling a bear and everything you see.
I don't think he's alone here. I just quick scanned over the volume on both sides for Groupon. There's heavy action across all the months on the 20 puts. So
the 20 puts, yeah.
the D's, Jan, April, July's, there's heavy action across all the 20 puts, but the biggest single action was in the July 15 calls, which are in the money. They're $9 in the money. 2,742 is the volume today. So Gregius has a follower.
What month was that?
The July 15 calls, the deep in the monies.
Oh, jeez.
Let's hope he was a seller.
No, speaking of put spreads, though, I did jump into Green Mountain Coffee. Was it late Thursday or early Friday? Sold a put spread, the 45.40 in there. So if anybody wants to get a bullish sentiment, I think that's a stock you want to get into. Need a little help in that one.
I think we need to know if those are in the 529 accounts.
The custodial and the educational. No.
Yeah, those.
No, they're in the Jon Gregius early retirement or late retirement now plan.
Well, you know what, too, if you look at Groupon, I'm looking at how these options close. I didn't watch it all day, but you've got the reversal combination going for $1.60 under. You could this radio show could save somebody $1.60 on entry right now by selling the put and buying the call combo in December for that entry point.
Yeah,
and taking the long stock $1, you'd save them $1. What is that? That's $1.60. That's $22. That's $22.40 net purchase price for Groupon right now for listening to Option Radio.
Yeah,
Option Insider Radio.
That's always a good point to bring up with some of these new names where they're heavy on one sentiment or the other. When they first list, these conversion reversals just get crazy out of whack, like you just pointed out, and you can leg into some decent underlying positions and decent positions in general if you're a wee bit savvy here on the options side. And so that's a good tip from Andrew there. Speaking of savvy, I'm looking at these July 15s Monday, Mike, and I see a bunch of one lots going up. I see a lot of selling activity in this, actually. These guys are hitting bids. Here's 500 going up, hitting the bid. Here's another 500 going up, hitting. So it looks like the predominance of these were sales. So looks like this guy might not have been the bull he initially looked out. So, Mr. Gregius, is this you hitting the bid? Are you talking it up here, then hitting the bid in these deep calls?
No, not at this time. If I was, I wouldn't tell you anyway.
But yeah, Gregius. Yeah, Groupon really just I know a lot of people have been waiting for this one to go live, and yeah, that conversion reversal is quite juicy indeed. The highest activity strike next to the Julys was, of course, the D's 20 puts. Seemed like we had a bunch of activity in there. I think the bulk of those being buyers. So you're right, they have a lot of sale opportunities here for potential savvy traders here in Groupon. All right, that is going to do it for the old trading block. And now we're going to roll right into the odd block.
The odd block.
And welcome to the odd block. This is, of course, the portion of the show where we discuss the interesting and or the unusual options activity that is lighting up the tape today. We're going to kick things off with Titanium Metals Corporation, ticker symbol TIE. Maybe they like they're old Star Wars fans. They like TIE Fighter or something like that. I don't know. But making this maybe a little more exciting than it is. We're seeing a lot of unusual call activity here in TIE today. First off, let's just set the stage for this one before we even get into the specifics. This is the name that closed today at $15.88, up about 28 cents or nearly 2% on the day. They do about 2,500 contracts a day. They did nearly 9,000 today. The bulk of those appeared to be opening call buys. A lot of activity on the D's 17 through 19 strikes and the calls. We saw, about 7,200 calls went up versus 200 puts in the same time period here. So a lot of heavy call buying across these three strikes here. In December, with D17s put up nearly 2,000 contracts, the D18 put up 1,100 contracts, and the D19 calls put up nearly 2,000 as well. So each of these strikes doing essentially almost 1 day's worth of volume here on TIE, and the bulk of this activity was driven by some takeover chatter coming out from our friends over at Fly on the Wall. Stock up, as we talked about earlier. So a lot of these options traders appear to be piling in to looking that this takeover chatter is perhaps for real. I don't see here who the potential acquirer or who could be or what the nature is of the chatter, but nonetheless, these options traders are buying it because they're scooping up upside here like it's going out of style. And if you look at a chart here of TIE, they're not terrible buys. I mean, TIE has been trading. It seems like you have a lot of resistance up at that 20 handle that bumps up against it a few times. It broke through it once, but other than that, it's been trading in the 14 to 20 range for the better part of the past year. So a lot of potential upside in perhaps in TIE. Any of you guys watch this one? I know Auntie Mike / Monday Mike, you guys are active in the energy and mining land. You ever watched good old TIE Fighter here?
Have not. I wish I had more to give you on this one. I really do.
That's part of the fun of the Odd Block, is that we find these unusual names, ones we don't normally see. And so that's going to do it for good old TIE Fighter. And now we're going to move right on. Someone's out there's going to be typing that into their tickers to search for TIE Fighter. Now we're going to move on to a little more well-known name, Home Depot. They closed today at $38.25, up about 20 cents on the day. They do around 20,000 contracts a day. They did a whopping 125,000 today, so it was a busy day for Home Depot. In fact, they were leading. They were among the most actively traded options today for equities, single listed equities anyway. So a lot of activity, a lot of focus going on in Home Depot because, not surprisingly, they have earnings before the open tomorrow. And if we start parsing the trading activity here in Home Depot, we see some interesting sentiments. Someone's going in and out of a door a lot. Yeah, it's like we're in a haunted house or something.
A squeaky door at that.
Andrew, is that you going in and out of your squeaky doors? I was like, I feel like I'm walking through a bad Scooby-Doo episode or something with these squeaky.
Zoinks!
I usually have the mute on when you're doing this, and I failed there. All right,
don't remute, just remute. There we go. All right. Yeah, we saw a lot of bullish activity on Home Depot today. We saw a total of 125,000 today with a significant, let's see what the numbers were. Yeah, almost 3-to-1 calls to puts going up here in Home Depot. The bulk of the activity, not surprising, was in front month here. The Nove 39 calls seeing a lot of interest. We saw about 34,000 going up on the day today. Previous open interest of just 7,000 contracts. So a lot of opening buyers lifting offers here in the Nove 39s. The bulk of them traded for around 43 cents. So these trades already looking good given all the burst of vol we've seen on the strike. They went out at around 50 cents. So a lot of buying activity here on these strikes. We also saw, just buying activity in the calls across the board. Nearly 10,000 of the Nove 38s, nearly 7,000 of the Nove 37s, and about 4,000 of the Nove 40s. So a lot of the activity pretty much in the front month calls. We saw some Ds 39s going up to about nearly 7,000 of those. Last time Home Depot traded above these break-even levels, which would be over 39 for a lot of those Nove 39 calls, was back in February. So they have a little bit of room to run on the upside here. Any of you guys playing in and out of Home Depot today? I'm sure, John, you were, because I'm sure a lot of people were calling up for this one today.
Yeah, I mean, anytime we have earnings of a somewhat popular security or equity that someone's actually heard of or visits.
You saying no one's heard of TIE Fighters?
Their home shopping needs. I mean, no. I was going to say I do write some of these down though, because I always like to take a look at the ones and take a look at them after the show and kind of see what happens, especially when they have earnings like this. So I'll keep an eye on Home Depot for the next couple of days. But a lot of retail people calling in about Home Depot. I believe we also had Lowe's after the bell today. I looking at the aftermarket, doesn't look like it may have come out yet.
I think Lowe's might have been yesterday, because I think they said that Lowe's earnings came out this morning. I'm sorry. So I don't trade on Sunday, Mark. I don't know if I'm sorry. I mean
Sunday, Mark.
my extra special pre-earnings trading there on Sunday. This morning, and looks like Lowe's came out this morning. And that's part of what gave Home Depot a lift today. Is Lowe's beat their numbers, so people are thinking Home Depot is going to do the same. I don't know. You guys have any preference, Lowe's versus Home Depot? I know some people are really.
Oh, Home Depot all the way. Lowe's is like 20% overpriced. Everything you see in there, can't stand them. And it's the only one I have in my town too, so I had to actually drive like 2 towns over. But no, as far as trading goes, I mean, even Home Depot gets more calls than Lowe's from a retail standpoint. I'm not a big fan of earnings plays. I mean, I rather see people selling premium. It's always a disappointment when you have these people that'll put their account, 70% of their account value into an out of the money call or put, and then wake up to see it went their way, but it's still out of the money, and they want to know why they're losing money. I mean, that just gets old real quick. I mean, if you listen to the podcast, call us before you put the trade on, not after the fact, when you want to ask questions on why it didn't make you money.
Yeah, that's still our number one call, is some aspect or some variation of that, or email, I should say. We don't get many calls anymore, but a lot of number one email or Twitter question or what have you is, I bought calls, stock went up, why did I lose money? We still get that one a ton. Even though we've answered it 74 million times, there's still a constant influx of new people who are constantly amazed at how options perform in the real world. So yeah,
just take a look at that at the money straddle and take a look at, don't play it or put it in a virtual trade and see what it does tomorrow. But that, the option price, pricing those options, that at the money straddle is usually pretty close, pretty dead on.
Yeah, that straddle. Go ahead, Andrew.
I was just gonna tell them, the problem is they're only looking at one thing with watching the stock go up: an option price, the two dynamic components are volatility and price. Since they're only looking at half the equation, they're going to lose money, most of the time, because they're only seeing what half of the driving factor is for an out of the money call. So maybe you need 75,000 and 2 times, maybe, if you tell them that. But
there we go. If you have that question now, just call Andrew. He can
That's
answer
my
it for you.
soapbox, the volatility soapbox at Option Pit. We're going to keep banging that drum for a long time now.
I've answered that question enough. I passed the baton to Andrew now. All of your upside call questions can go directly to him, Andrew at optionpit.com. But maybe we can delete that if you don't want your email address floating out there.
No. It's okay.
All right, and then last but not least, another unknown name here in the option block. I'd be surprised if any of you guys have actually heard of this one. You heard of this, IBM?
What's the ticker symbol?
It's an up and comer here. I have good hopes for this one. I think they might actually do well, these kids. And one of the reasons we have this one on here is we joke a lot on this show about the old Buffett effect, and there's newsletters and all sorts of publications devoted to analyzing what Buffett's going to do next. And here he comes on the Squawk Box this morning, and pretty much talks up his 5.5% stake in IBM. And so, not surprisingly, the lemmings were off to the races after that. All it takes is the whisper that Buffett is interested, let alone owns 5.5%. And the buyers were out in force. We saw, not surprisingly, people gobbling up the calls here in IBM today. IBM usually does about 50,000 contracts a day. They did about 50,000 today, so not a high volume day, but there was some direction to it. We saw, IBM closed today at 187, about unchanged on the day, ironically, too, down only 3 cents. So I guess that early sentiment, early boost they had didn't sustain them throughout the day, but we saw about 1,500 of the December 190 calls, so near upside calls here, pretty much at the money calls almost, going up for about nearly $5, $4.81 a piece early this morning. Those are already looking pretty ugly. So hopefully they got some hedges off when the stock was higher here. And they also picked up 1,700 of the DEES 200s. This guy was really optimistic here, or these traders are really optimistic for $1.09. These are already trading about 40 cents lower as well. So looks like that the Buffett surge already seems to have expired here in IBM. These calls exactly not looking too good. One guy looks like he might have been on the right track here. One guy faded the Buffett love. He picked up the 185, 190 put spread for about a $1.74, and that's looking all right. That went out at about $2.10 or so. So one guy came into the dark side with Buffett, and I think he picked up that 2,000 times for $1.74. So I guess you guys right now, if you had to be on the call side or on the put spread side of this equation, which way would you be leaning, knowing that Mr. Buffett is indeed a 5.5% stakeholder in IBM?
I'd probably lean towards the side of neither. I'd probably lean towards the side of picking my spot on IBM that I thought was a good spot. and selling puts to get in, like on a cash secured basis. So probably selling the 185 puts to get long to stock at.
You're far too sensible. You're no
and
fun, sir.
Change is probably where I'd be leaning.
I'm trying to draw some wild picks out of you.
It's not fun.
But yes, IBM exactly setting the Buffett faithful on fire today. And yeah, IBM's a weird beast these days. We talk a lot about Apple and and Amazon, all these other names that have the consumer focus. And yet IBM has pretty much abandoned the consumer market. I mean, most famously dumping their popular ThinkPad line over to Lenovo a few years ago and really focus on the enterprise side. And a lot of people have forgotten about IBM, that they're still around, but they still make a ton of money. They're just not out there with the black turtleneck doing the customer presentations every few months like some other names were out there and a lot of other firms out there launching new products that are sexy and catch the eye of the consumers. But there's still a ton of money to be made in their enterprise and services, and IBM still shows that. So people who are hardcore sellers of IBM perhaps might want to watch out. An interesting one nonetheless to watch, the two sides of the paper coming in surrounding that Buffett announcement. We'll have to keep a watch on IBM going forward. I'm not saying I'm a huge IBM bull or even a bear right here. I probably would lean the Auntie Mike way as well, as if I want to get in, pick up some downside or hit some downside to pick up a nice level in IBM here. But I'm not exactly a huge seller either.
It's a good solid meh.
Exactly. It is very much a meh. It reminds me of Microsoft earnings. Meh. It's hard.
Well, I mean, he's already bought the 5% stake in the company. He's all done. It's not like it would have been better when we heard that 3 months ago.
Yeah,
now
you're right.
When he's all in.
But you know what? The Lemmings want to be on the same ship as him. Whether that ship's going down or not, they don't care. Well, as long as they're on the same ship with Warren, they feel safe.
If you're a Buffett tracker, you got to buy. You have to jump in and buy some stock. But he did pick the oldest technology stock probably in the S&P 500.
Yeah, this reeks of a Buffett pick. It's not exactly the most maybe sexiest thing in the world, but they have solid numbers, they make solid revenue, they actually make money. And I don't think we're going to see Buffett piling into Groupon anytime soon, despite Gregius's entreaties to the contrary. Come on, Warren, pick some up. Help out my calls. All right, that's going to do it for the old odd block today. And now we're going to roll right into the Gregius block, a.k.a. the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is, of course, the portion of the show where Jon Gregius tells us about all the fun happenings in the world of OX today, or the world of OX in general. And Mr. Gregius, a little birdie, told me today that you guys had some fun with RJO over there. They were down a wee bit today, or perhaps inundated might be a better word.
Yeah, I'm starting to see RJO in my sleep. Emails started at about 8 a.m. Saturday morning. Conference call at noon. Got on the phone with all the brokers Saturday afternoon. Staff for Sunday. Another conference call. We're not doing Sunday, so that was just the weekend. I had a couple people that did work on Sunday.
You took this job for the banker's hours. What's going on here?
I know, right? I mean, there is some downfall of smartphones. I mean, I had an email. I missed the email because I really don't wake up in the morning. The first thing I do is check my work email. So then I started getting texts and phone calls, and they got you. So, I mean, I don't even have a landline at my house. I mean, they know I got to pick up. But so we did staff extra, customer service. It's what we do at Options Express. We did throw some extra brokers onto the phones on Sunday in anticipation that some of the news over the weekend that some of these funds were starting to move. I heard an article that the CME was kicking in about $300 million. I think they had that under one of the seat cushions, so they're going to toss that in there. And so we heard that some of this monies might start moving Sunday. It didn't, now it's looking like Tuesday or Wednesday, but, I can't wait till we get past this where these accounts have been moved and these people can get back to trading and get some type of normalcy back into this industry. But even today, I think a lot of these accounts that were moved over to RJ O'Brien, and this could be completely unrelated, could just be timing, but it's hard to say it's a coincidence that RJO was having some issues getting some orders, fill orders routed back to us. And I think everybody knows, if you're a client at Options Express, kind of where we stand. All your tickets are time punched. We usually, at 99.9% of the time, make people good at their price, and that's pretty much what I did since about 11 o'clock on. And I'm sure it's still going on right now. But I'm hoping the two run related. I mean, it's an opportunity for RJ O'Brien to kind of show them what they can do, and and we're kind of riding on that wave because we only use two different FCMs to route our orders. So next couple of weeks are going to be interesting. I know I've talked about it last Monday as well, so I don't want to talk about it too much. One of the other things that we saw too on Friday as well as today, on Thursday of last week, FAS did a 1-for-5 reverse split. Reverse splits can be handled in two ways. How the OCC mostly does them now is that they change the deliverable. So in this case, a standard FAS option, and I believe the other ETFs were like DRV, TMZ. I don't know, Mark, maybe you think the other two off the top of your head, but they really don't trade as much. FAZ, when we're looking from a standpoint of those reversed options, 80% of our clients were in FAS. So what they do is they change the deliver from 100 shares to 20. Nothing else changes. Multiplier stays the same, the strike, quantity, and it throws a lot of confusion. I'd say 20 to 30% of all our calls on Friday and Monday morning were based on the reverse split of FAS. What we saw the customers have the most problem with, and some of our brokers that are newer to the desk, is that they were in calendar spreads. And I watched two brokers attempt to roll their front month non-standard short option into a standard, thinking that let's do the same contracts. Yeah, you can go ahead and do that. Just if you're long 30 of the leaps and you're short 30 of the NOV weeklies, and you want to roll into the standard monthly weeklies or the standard monthly FAS, make sure you're reducing that amount by 0.2%, because you can't no longer do 30 because you're not going to be covered. You're only delivering 600 shares on your leap. You got to make sure that you have the same amount in the front month. So I caught two of those, had to explain to the broker, had to explain to the customer. It's a little disappointing that we try to prepare for this, go through it with everyone beforehand, and we still have a couple hiccups. But I mean, two out of, I'd say, 250 to 300 phone calls on Friday. I think we did okay.
It's funny. I teased Tim about this last week too, because he talked about reverse splits and adjusting options, and just in general the adjustment process, how many calls you get. And I told him, I said, didn't a certain broker go through this and answer all these questions last year with earlier this year with a very large special dividend and all of the ensuing madness? I forgot what the name of that broker was, but a certain firm, I think, put a lot of this on the front burner when they announced that dividend. I know we were getting tons of emails. Why aren't my puts printing money here?
I mean, that one was even worse. I mean, because that was a special dividend, so I believe that the record date was well before the X date. So we had a lot of people thinking that they could hold it to the record date, sell it, still get the dividend, and then we had people buying puts, and they're like, I didn't buy the 15 half, I bought the $20 put. What happened? I mean, if it were that easy, guys, us three would be millionaires, or us four.
Or we'd be senators, right?
Oh, that's right. Yeah,
tossing it to 60 Minutes.
I had to throw it in there.
That was awesomely timed, by the way, right there. That was outstanding.
not even scripted either. But
no, that was good.
So the FAS, I mean, that's kind of worn down. But I mean, just realize reverse splits, your deliverable changes. You won't see any change on there. They're still going to price them. There's still liquidity in them. If you're going to open up new contracts, go into the standard one. They came out on Friday. On the other side of the spectrum, we're seeing a lot of calls, a lot of premium sellers in crude oil right now. I don't know if you've seen Crude. I'm sure over there at Know Your Options, they've keep an eye on the commodities, the metals, and the energies. But Crude, since like October 4th or 5th, hit a low of like $75. And that front month D's contract currently just hitting the $100 mark. So we when gold hits 1,500, 1,000, gets close to 2,000, we get a lot of phone calls. When crude oil gets up to 100, we get a lot of phone calls. We see a lot of premium sellers up there, a lot of people trying to short it at just around 100, which is always, I'm a contrarian. And I think, God, if you think it's going to stop right at 100, it's just too easy. So I would think that oil's going to, test the resistance up here at 105 area. I don't know. What do you think? I hear a little gasp over there.
Didn't all those guys get shaken out by the day of rage? All that fun where we saw the reverse, people loading up on upside premium. So you're seeing a lot of upside sellers in oil. That's intriguing.
Yeah. I mean, it's up 30% in 5 weeks. $100 psychological level. I mean, the economy isn't really moving forward, which you would think you would kind of, is oil telling us that the economy is doing better? The interest rates aren't coming down that much. Or I should say the 5 and 10 year and 30-year notes aren't pulling back, but oil is going up here. So is demand going up? Is it showing us something that we don't see in the stock market or the interest rate futures market? I don't know. So a lot of people think, hey, the economy hasn't rebounded. This thing's up 30% in 5 weeks. Psychological barrier. When you get a lot of fundamental and technicals kind of come in line, that may be a good time to get short. I mean, I give it another 5 to 6%. But I think we're an area where retail is really taking a look at crude right now.
I would agree with that. And I still think at the end of the day that the consumer drives the sentiment in the marketplace. And there was a commercial. I don't know if you guys have seen that Nissan commercial where there's a guy the dentist is putting gas in his drill and he's like firing it up like a chainsaw. And like the question is, what if we had to put gas in everything? And then they followed up with the question, what if we didn't use gas for anything? And it showed the new 100%, not a hybrid, 100% electric car. So at some point here, how high can crude oil go? I mean, I guess we saw it get up to however high it got back in January of 2009. I know it got up over $150 a barrel. But at some point here, the consumer is going to get sick of paying $3.50 at a pump, and they can plug their car in and drive off. I think that there's just going to be upward resistance as these electronic cars become more favorable.
I get in trouble a lot with the oil bulls because I always like to say that what we saw in the 08, 09, the resulting debacle in the markets showed that there is indeed if not a top, at least at the very least a very near-term resistance level at those levels we hit back in those those stratospheric oil days. And a lot of the oil bulls say no, that was just a temporary blip. But I think that showed that there's a limit to how much the economy can withstand in terms of oil prices. Before you're right, people look to alternatives, people change their behavior, people dump their massive SUVs. I don't know if you were buying a car in 08 or 09 like I was, you saw that they were giving away SUVs, they were throwing them at you. Please take this SUV, but you want this small efficient car? Oh no, that's 20% above sticker. So people who change their behavior, people do a lot of interesting things when those types of environments occur. So maybe
you're
not.
You're just gonna have to follow the old Prius Escalade spread.
There we go. I like it. I think around town I do see 2 or 3 Priuses now for every Escalade, which I think is a healthy ratio for the world at large.
And I'll tell you this, it's like clockwork. In the last 3 years, every time gas at the pumps has gotten over $4 in Chicago, the number of people riding the L and the Metro skyrockets. I mean, you go from being able to get a seat fairly easily to the thing's packed and you might miss a couple trains. I mean, the consumer's cost sensitive to it. And, when it does pop up, you notice more people on the trains, more people riding their bikes. So at some point, enough is enough. And I'm more a long-term bear on crude oil. Interesting.
I at these levels, you're a long-term bear?
Yeah. It might pop up, short term, but I would conservatively play the short side of the oil market.
You better not talk to Peter then.
Long term. Peter won't talk to me because I'm supporting the Movember cause with my mustache. I saw Peter last Wednesday at the ISE event at the Willis Tower, and he made it a point not to talk to me because of my mustache.
Oh, that's terrible. Because I was going to bring that to Options Express. I don't know if you guys are familiar with Movember, but it's raised cancer awareness in men. And I really tried to get it started here, but it kind of people get scared. I don't know what's wrong with a 70s mustache,
I'm kind of scared. I look like Ron Burgundy.
Well, there's different types of mustaches, right? You can have like the 1920s, the child molester ones, the 70s porn star. I mean, it could go really wrong, or it could actually look somewhat good.
I can see you with the handlebar, Gregius.
I've got the 1970s Ron Burgundy push broom on my upper lip.
I think someone should go for the full handlebar and just go all out. I already have a goatee, so I'm kind of disqualified. So you'll have to be Gregius. You're kind of clean shaven, so you could go for the nice handlebar.
Maybe you make that a new requirement now, Mark. If you're going to go on Option Insider Radio, you got to have a big nasty mustache. That's going to be the
there we go.
the new litmus test.
There we go. We don't
forward.
trust anyone without facial hair on this network.
I like it.
All right. And that is going to do it for the old Express block this episode. And now we're going to roll right into the strategy block.
The strategy block.
And welcome to the strategy block. This is, of course, the portion of the show where usually it was Uncle Mike who would sit down with some sort of interesting tidbit or technique or trading tip or strategy. But today we actually have a new person sitting in on the old strategy block. He is, of course, Mr. Andrew from Option Pit, aka Slinky.com, and he wants to. Andrew, a little birdie told me my birdies are very active. You know, they're quite well informed, these birdies, and I think our discussion of Groupon earlier really wet your whistle for some interesting potential strategy / tips / tricks for people looking to dive into Groupon. So take it away, sir.
Yeah, it did. And the Slinkies, we're giving the Slinkies away as swag at the money show, just to let you know. But other than that,
and I hear the nice metal ones, not the cheap plastic ones.
Yeah, Mark went all out. I was very impressed by him. I was really very impressed.
Tell him I'll be expecting my Slinky in the mail shortly.
No problem. My kids are wrestling for me. Okay, so Groupon. So what I've noticed, a couple things. Obviously, there's the crazy reversal conversion markets. So if you're long Groupon stock now, if you love it, you could just reverse out of it in the market, and the market will pay you about $1.60 that you didn't have right now. So that's an easy $1.60 for all you long Groupon holders right now.
Yeah,
the second
take
thing
the money and run, the Groupon holders.
Exactly. Take your $1.60 and go.
Hey, Andrew, can you just drill down on that? Let's say
Sure.
I am long Groupon and I'm a novice options trader. When you say I can reverse out of that, I'm long the stock. What do I have to do to act on that? Exactly.
So what you do is you would sell, let's say you want December, okay? You'd sell the DEES 24 put and buy the DEES 24 call, and that combination's $1.60, right? You take that $1.60 from the strike at 24, that gets you down to a net buying cost at $22.40.
Yep.
And you'd sell your stock against that in the package. So your long stock goes away, you're good. And now that combo is going to go to parity at expiration. You're going to collect the $1.60 you got under it. The only problem is where Groupon's going to end up. You're still a long holder. You're still going to be long, but you're going to make the $1.60.
Gotcha. So I own the stock.
You own the stock currently.
I sell the at the money 24 call. I buy the 24 put.
You do the other way. You sell the 24 put and you buy the at the money call.
Got it. I'm buying the at the money call and I'm selling the at the money put and I'm selling the stock as well.
Right. The stock that you are long. Correct.
So I'm going to end up with the net position of long the call, short the put.
Exactly. So you get that synthetic combination going on, but you bought it way underwater. So essentially you're just selling out the stock higher. You're buying the stock lower that you already own. And that combination will go to parity at expiration, has to.
And I still have the upside because I'm long the call.
Correct. It will act exactly like stock. So if Groupon explodes to the upside, you're good. You'll be fine. You'll make your extra $1.60.
And that, my friends, is what this person calls a no-brainer.
If you own the stock, well, plus, right now there's such demand for stock. Right. So if you are a long stock holder, I mean, it's almost like they're paying you, right? That's what borrowing stock is. They're paying you to borrow stock. So that is a trade you can make in Groupon. Okay. Yeah. And the second thing I saw is, nobody really knows obviously where Groupon's going to be, right? It's only been listed for, a couple of days here.
Speak for yourself, sir.
Exactly. But the thing is when these calls are so cheap, because of this reversal, that is an opportunity to maybe buy calls like the 24 or the 25 strike and maybe sell a 20 against it, right, on a ratio, and then we'll see what happens with the stock. So you're really picking a range of, $22 to $28 or something like that, right around there, depending on the strikes. But you are buying that second call unit for for very, very low prices. So if we actually do get that real volatility in the underlying from, a new internet listing, that's another way I would look. That's a possible play there. So you can kind of watch how the volatilities bounce around. The one thing you are going to get is you're not going to get a lot of upside performance because of the hard to borrow, because the calls are so cheap. I know it sounds strange, but you really need that stock to explode. But, probably the real money will be made in selling puts. I don't think I can go on and tell people to go do that in one of these things. So, the potential ratio call spread for credit, I think might be a way to do this and be able to make some bucks. So those are how I would play Groupon. But now it's interesting enough for me to watch with volatility here in the mid 40s.
Yeah, that's definitely a safer pick than telling people to go out there and hit bids on all these juicy, delicious puts that are floating.
Exactly. The 18 put for 55 cents. You probably aren't going to get killed, but when it's $13, you won't be too happy.
Yeah, exactly. So. We've seen enough action in the Widowmaker, aka Netflix, recently to make everyone think twice before they immediately go out and hit these bids. As tempting as it may be to, like I said, hit those 19s for 80, 85 cents. Be that as it may, thank you for that, Mr. Andrew from optionpit.com, aka slinky.com. And probably will be kindlefire.com soon too. That's what you guys are giving away now at the Expo here.
Yeah. The Slinky you get just for showing up, but if you actually win our contest, you're going to get a Kindle Fire, which is pretty cool.
Yes, and Jon Gregius can take solace in the fact that Andrew also recommended a net bullish spread. So there you go. There are two. The
extra contract got him. I sucked him in.
All right, and with that, we're going to close out the old strategy block and roll right into Around the Block.
Around the Block.
And and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's coming up on our own trading screens and what we're watching and keeping an eye on for the rest of the week. And, of course, we do have some numbers coming out this week. We have jobless claims. Thursday is actually a relatively active day. We have both jobless claims and housing starts there on Thursday. And if you look at the recent track record, housing starts seem to be a decent mover, at least these days, amongst some of the other numbers we have floating around out there. Housing starts have definitely grown in importance. Whether they can overall match their performance of late, it remains to be seen, but definitely a lot more people watching housing these days than there were, say, a year or two ago. Aside from that, not too much lighting up the exciting earnings front. We talked about Home Depot coming out before the open tomorrow, so if you haven't played in that one yet, it's a wee bit too late for that, unless you're trading some stock in the after hours right now. And of course, we have anything else you guys are particularly watching for? Anything else, you guys? What are you guys watching for the next few sessions around the block here? Auntie Mike, we'll start with you, our Monday Mike.
I'm looking for, I kind of still looking at the VIX, and I know Andrew and I were talking about this about a month ago. We're still above 30 on the VIX, and I kind of look at it as it's like a sick kid. You see him, he's green in the face, he's looking at you in the middle of the room, and you're like, oh, I hope he doesn't puke. Oh, I just hope he doesn't puke. I hope his immune system takes over and he's not sick in the next week. I think the kid's going to puke, and I'm like, hurry up and let the kid puke so we can move on with our lives.
Right.
Not the greatest analogy. It's kind of pukey, so to speak, but I think
Lovely
the market's
analogy.
got to puke.
Well, Sebastian isn't here, so someone has to make the uncomfortable and fill the uncomfortable analogy.
I'll make the uncomfortable analogy. I think the market still needs to puke. I'm looking for just a flush, just some big volume, a down day, some news, anything.
So just to clarify, you're not saying the VIX needs to puke. You think the market needs to puke and the VIX needs to move north. Okay.
Send the VIX rocketing higher, and then it'll come back down. But it's staying at 30. It's staying at 30. It just seems like the market needs to get whatever's making it sick out of its system, puke it out. Whatever happens, happens, and then off we go. I mean, companies are still showing profits. That whole financial mess in 2008, the big fears are, is the market going to open tomorrow? Is the market going to open tomorrow? That's what emotions do. So I'm looking for a big volume to come in and just to wipe the VIX, scenario out. Have it pop up real quick and then come back down. However it looks, whatever's keeping it above 30 is still in the market. and they're trying to give it medicine, and it might have to be the old toothbrush down the throat just to get whatever's making the market sick out of the market.
Yeah, it's going to be hard for VIX to sell off when you still got all these net unit buyers lurking out there in the SPX, With them gobbling up skew at every opportunity and still holding bid, you're not going to see VIX take a move to the downside anytime soon.
No, it's unfortunate but true. It's the way it is. I like the collar idea on equities, though. I mean, that gives you something to trade if the market pukes. You can be at the bottom and, and you can
sell your puts
sell
the puts that you bought, finance the purchase of some more, cost in. And
you feel 100 so much better when you have something to do and everybody's puking. I really think that's a great analogy.
Yeah.
You have something to give them.
Yeah. It's like that. It's that first beer after you get done puking. It actually tastes all right.
It doesn't taste too bad. Oh, wow, I feel better.
We have some interesting potential titles for this episode, and I'll just leave it at that. Of course, speaking of continuing the puking metaphor, Apple moving to, we talked earlier about how maybe it might be pinned at around the 400 level. It seems to be testing the downside of that puking range away from the 400 level. And it's vacillated down this level before 375 or so. But I know you guys still have some holdings out in Apple on T/Monday, Mike. What's the strategy here? You guys tightening up the collar?
No, we're long the puts. We haven't sold the calls yet. We're long the underlying. We're long the December. I believe it's the 400 puts. So we're kind of more looking for support here at 380. And I know we dropped below 380. I didn't catch where it closed today, but I know we dropped below there. I mean, it might be the end
about
of our
379 and change.
Portfolio. Yeah, I mean, it's getting to that point. Hey, Apple had a great run. Steve's not there anymore. It's getting difficult to make a long-term case for Apple to continue its growth. We might say goodbye to an era. I don't know for sure if we're going to dump the stock, but we're not short any calls on it right now. We're still long the underlying and we're long the D's. I think the 400 puts. So we're waiting for a bid to come in. If it doesn't come in, our downside's protected. We might have to let go.
Wow.
Play the Happy Trail song.
Wow, the diehard KYO Apple Bulls. So much so that Uncle Mike even had a client on who was a big Apple Bull. Just the end of an era. The end of the KYO.
I don't want to speak so soon. Mike didn't talk to Mike about Apple today, so he might be waiting to just go hog wild bullish. I doubt that's the case. But,
diving in with both feet. Yeah, so listeners, you heard it here first. Might be the end of an era. Perhaps this is the beginning of the end for Apple.
We might have to trade an Apple for the burrito.
Yeah.
And start looking at Chipotle.
Chipotle. I've always said Chipotle is the unsung Apple. They're growing like mad. They were for a while their price comparative in terms of equity. Apple has since outdistanced them a bit, but Chipotle is definitely in our book anyway the unknown Apple. And Andrew, aside from VIX unit puts, what are you guys watching over in the land of Option Pit for the next few sessions?
We have been watching Green Mountain Coffee Roasters a little bit post expiration Vegas sale, Condors in January, seeing if we can get the volatility to move like 90 to 70. So it's been going okay. Hasn't really come in huge in any way, shape, or form, maybe a tick or two. But just see if GMCR can actually kind of maintain this volatility, even though it's kind of lost a lot of its flavor, so to speak. So that was a trade we're looking at I start looking at more equities. Mark really focuses on the index, so that's kind of how we separate the market and the two meet every now and then. So, as far as what we're doing this week, though, is we're going to be at the Money Show. We have a contest on the floor. You can win a Kindle.
Hold on for that one. We'll get to that in a second. That'll be the final little bit. Let me get.
Oh, you want me to talk about trading? Oh.
Let me get Gregius. Anything you're watching for this week before we dive into the final bits here?
Yeah, don't worry about that, Andrew. I do the same thing. Every time we do this, what's coming up around the block, I always start talking about the events coming up.
It's like you guys have never been on the show before.
But no, I mean, as I mentioned in the Express Block, the crude oil inventories will be something that the desk will be looking at here on Wednesday at 9:35. Draw down in inventories, could see that spike and see if we can break through that 100 level, that psychological barrier that we're looking to at least test here in the next couple of days. And Green Mountain Coffee. I mean, I got to tell you, that thing, if you saw it Friday, it had a bid offer of like 41 by 41 and a half on the NYSE, and it traded all the way down to 34, I think 86 or something like that. A couple thousand shares. I felt bad for those people that, may have sold it at that level, because it was trading over 42 in about 2 minutes after that. So I'm holding on to my put spread. So I'll be watching that as well.
Yeah, closed here about 42.
One of those things. Yeah, I know. We picked a really pretty wide range for the Condor to look at. So if it stays between 40 and 50, I'll be happy for the next couple of weeks or so while everybody gets bored with it again. I think that's what we all need. We need to get everybody to be bored with Green Mountain Coffee Roasters for a while.
Yeah, boredom is the premium seller's best friend.
Yes. Yes.
All right, that is going to do it for this episode of the Option Block. I want to thank my cohorts here, my partners in crime, for joining me on the program. And good old Monday Mike had to leave, so I will toss his plug in for him. Of course, listeners, if you want to learn more about what they're doing over there, maybe what their plans are for Apple going forward, or gold, or all the other fun things we talk about with the guys from KYO all the time, then surf on over to knowyouroptionsinc.com. Maybe click on their 18-minute portfolio review and have them look over your holdings for you and see what you can do with a few nice collars and perhaps some protective puts around your equity. So again, knowyouroptionsinc.com. And Andrew, a little birdie, has told me that you are indeed heading out to, or you guys are at least, are heading out to Vegas for the old Traders Expo, where our listeners can win many fabulous prizes if they attend your booth.
Exactly. You can win a Kindle. You can win hours of Option Pit mentoring. So, and you just walk by, we give you a Slinky. Just for showing up, we give you the coolest Slinky ever.
That's the best deal. And not the cheap plastic ones, but serious metal Slinkies.
No, but, and then we'll be answering questions about options, positions, all the normal stuff we do. And we'll be, doing pit reports from the floor and things like that. So we're an educational place. That's what we focus on. So we'll be there live and in matching suits. So you won't really be able to miss us. We'll be there.
Matching suits. Will they
Blue suits with green ties?
Will they be option pit track suits, perhaps, like the Sopranos?
Well, it could happen if right now just the suits work. We might go to track suits as sort of maybe that'll be the swag. For our clients, they get to a certain level and we send them a cool option pit track suit. Mark might actually run with that. You know how he likes that whole 80s thing.
Oh, yes. I that's why I have expected it to be true, that you guys are going to be out there in some sort of Adidas tracksuit from 1985.
Yeah, I'm not going to, I'll put that by him and see what happens. Wow, what a great idea. We'll send our clients tracksuits.
Don't allow me to feed his mad brain with any more crazy ideas. All right. And Mr. Gregius, of course, that same birdie told me that you guys are going to be out there as well at the old Traders Expo this week, or at least Mr. Cusick and Jim are going to be out there, I believe, correct?
Yes, correct. Joe and Jim will be out there Thursday through Saturday. On Friday, they'll have a learn foundational strategies and trade plan and simple strategy. They'll also do some breakout sessions on Thursday from 3:30 p.m. local to 4:15 in the Skyview Room 2. Ooh, sounds intriguing. And then also Saturday morning, 10:15 to I believe 11:30 in the same room as well. A couple other things that we have coming up that aren't on the website, but I was able to pry from Joe Cusick's hand in education. Saturday, December 3rd, we'll be down in Austin, the Austin Marriott South as opposed to the Marriott North, which we all know about that place. We don't want to be seen in there.
That's a hole.
And then Saturday, December 10th, Boca Raton, Renaissance Boca Raton
Some
Hotel.
retirement planning, perhaps?
I think so. Maybe Know Your Options wants to pair up and blow the doors off of Boca Raton. But so we got 3 upcoming events in the next month.
There you go. So no matter where you live in the country, you can get your Options Express fix. Just go to your event.
I'm seeing some type of it's end of November, December. They're going to Vegas, Texas, and Florida. Strange.
It's like there's some trend there or something.
Yeah.
And of course, you didn't get your invite to any of those.
No, I got to North Dakota and
you got the Austin Marriott North. You got the garbage. Oh, Gregius, you go to the North.
You cross those railroad tracks, man. You watch out.
You can't even see the bats from the Austin Marriott North, and then what fun is that being in Austin? All right, that is going to do it for this episode of the Option Block. I want to thank all of our listeners out there for downloading and streaming and subscribing to the show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.